Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. This is Monday, the 5th of December. I'm Daniel Lam, your host for the podcast. I won a very strong chess tournament over the weekend, where essentially all my key rivals in Hong Kong were present. And you know what? I was actually going to pull out of the tournament before it started. Well, it's been a challenging 6 months for me as a whole. And chess-wise, my failure at Malta 6 weeks ago did not help matters. So I totally did not expect my victory on Saturday. Now, on Friday night, there was also some very unexpected price action in the US. Non-farm payroll numbers beat expectations and was initially seen as hawkish for the markets. But S&P 500 index opened down by nearly 1% and ended the session almost flat. So what is going on there? Well, Jay Powell in a speech last Wednesday said that wage growth is the main driver of ex-housing core services inflation. And wage growth in the highly cyclical leisure and hospitality sector has collapsed this year. Now, more broadly, other indicators of wage pressures, such as the Atlantic Fed Wage Growth Tracker and job openings and quits, have eased. Moreover, the Establishment Survey, which is essentially the stronger than expected payrolls, and Household Survey, which shows lower participation rate, higher number of permanent job losers, continue to diverge. Establishment data tends to overestimate the underlying pace of job growth over inflection points, suggesting that the relative weakness in the household survey data is potentially relevant in the current context. So, overall conditions remain tight, but digging deeper, it may not be so hawkish now, and combining with the Powell speech last Wednesday, resulting in decent buying on the pullback for equities. So what next? Well, the positioning for US equities remain light, as there has been drop-off in retail buying lately. Hence, we need to watch if the S&P 500 index would be able to challenge the key resistance at 4,120, which is the top of the downward channel since January this year. But the more attractive opportunity, as we've been highlighting, is in Hong Kong China equities. At the time of this recording, the Hang Seng Index futures had already broken above the 5-week high that we saw back on last Thursday. It's been making higher highs and higher lows. With the improving backdrop in China, such as potential further reopening, investors would be well advised to aim for pullback and buy into the Hang Seng Index. Now, a good level to look at would be 18,500. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.